You can see in here the light crude market, it was due for an upward turn. You can see the cyclical patterns in here and how they follow. So you see this declining phase, this low. Actually, you make kind of a diamond pattern in here, which is a little bit unusual. Then this rally came right on time, you can see that. And then the engulfing pattern made the peak. The downturn in momentum made the peak. And that's called a left-hand translation, as it made the peak on the left side of the cycle. It gives a lot of time to decline and actually shifted even more to the right because it took so long during that March-April period when everything was falling. So now you could see the new cycle right in here. That's from that shifted timing, and that low that was due to occur right at this point, and then got the rally. So this is a pretty bullish pattern that we're looking at in here. The oil market not doing particularly well now today at a time when the stock market is rebounding. Oil got hit pretty hard on the daily, as you can see right in here, leaving that big tail yesterday after it was up very strongly. Yet today, as the stock market rallies, this can't, and that's because inventories had a pretty good bulge. So there's a lot of problem with a lot of inventory out there, and that remains. And as long as the economies remain slow, that is going to continue to be a problem. So we have the bottoming coming in right in here on the weekly. The low that came right in here, you can see the low here, the low here, this one right here. See how they line up? So we got into this next rally phase, and it's when you come down and take out this low and you do it at a point where you're at the bottom of a cycle, the end of a cycle, that isn't necessarily a negative thing. It's just kind of double bottoming, completing right there, and then beginning to move up. Problem is momentum negative right in here, momentum negative right in here on the weekly, and that means that the market has a lot of internal repairing to do for it to be able to really put on any solid gains. Now you can see in here that this cycle is projected to get up here to that area up around over 45, close to 46, because of the this positively configured pattern in here would then give you the highest probabilities you take out that last high. So that's what we have as an expectation in here, is taking out this last high and then getting to the top of that minor fib extension there. And that would be potentially a best case, though this one right up over here is at over 48. So it would take a pretty good bullish scenario and some changes in the supply-demand situation to be able to get that kind of a rally. Right now, what we're going to do is we're going to look at the daily chart, and you can see that rhythm, and that it looks like you should get up, test this level over here near about 4160. And then kind of chop around and continue to make some upside progress. If in the case that this low goes right over here, so that's roughly 3660, this low over here, roughly 3630, even testing those lows would be a very bad thing. And that would change this bullish scenario pretty significantly. So we're always going to watch that, where's the reevaluation zone from what has become a more positive scenario. Because we want to really understand if things do begin to change in a way that is significant. So this right now, a pattern that is suggesting higher prices.